Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Thursday, May 20th. I am your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That is our home on the web, MarketTalkAg.com. Find us there. You can find the links to all of our streaming sources, Apple Podcasts, Spotify, Amazon, so many more, our YouTube channel, all of our social media. Everything is listed online at MarketTalkAg.com. The show today brought to you by our friends at Growmark FS. A lot to discuss today. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us here on a Thursday. John, good afternoon to you, sir. And looking at this market today, we saw that big sell-off on Wednesday. Come back in here and see corn at least doing well. I think that's a good spot to start. Monstrous sales again to China. And that's been the story here now for I think we're running on like 10 days or so of continued China new crop corn sales. And that's really starting to kind of bolster this corn market right now.
Yeah, they've been impressive. And actually, if you go look at the new marketing year, the 21-22 marketing year sales on the books right now, we're at a record pace, at least here in recent time frame. You know, the biggest thing about this has been the earliness of things as well as the aggressiveness of the Chinese stepping into the U.S. market. Talk on the internet, maybe they're picking up 15 million metric tons here in this buying spree or this buying window. They got to 10.7 million metric tons since the 1st of May with today's purchase. You know, so obviously that's encouraging to see. Now the USDA is expecting the Chinese to pick up, a batch in here. So really hasn't moved the market so much at that standpoint because it is anticipated, on those yearly numbers that we got week ago here off the May report. So we'll have to see how it continues to play out. But, there's probably a couple things coming into play here. Of that new crop sales, we're at 14.7 million bushels or million metric tons, about 580 million bushels on the books for new crop for 21-22. Of which, like I said, China's at 10.7 million, and we've also got some other end users stepping in for some decent supplies. That's just maybe a combination. They're a little fearful of what that Brazil crop is going to be, so they want to lock in things as fast as possible. Plus, just with the overall tight supply picture globally, corn might look like a value to them here, especially since we pulled back, last week at the end of the week. So that's the encouraging side. We'll have to continue to see how that develops. The biggest thing is, though, again, with those heavy sales on the books, that just doesn't leave much room for error for this crop for this summer. And, that's going to keep this market pretty volatile, especially if we have any weather whatsoever start to develop in the longer run.
Well, we talk a lot the last few weeks or so about buying the break as we'll have a down day or two and then we'll see the funds step in. They'll buy this market, push that price higher. But what about if I'm a farmer looking at, some of the premium that's come off this market and I'm looking and going, maybe I'm getting a little upset that I didn't pull the trigger. What are your thoughts on this corn market if I need to make some more marketing moves right now, or if I'm thinking that I missed the boat and maybe need to make a move now before anything else might happen?
Well, you got to look at the big picture right now, and everybody would love to got corn sold in the $6 plus window that we had here just last week. And again, it was another one of those situations where the market can take it away a lot faster than it took it to build. But we're still got good value. I'm looking at December at 550 plus today, at least at the time of, as we get towards the close here. There's still some decent value on the board. If you're light on some sales, this is a great window to make sure you get something in. We got to look at what's kind of moving the market here overall. First off, a lot of talk that the acre number is going to probably be higher at the end of June. I expect that to be the case than what we saw in March. That could put a little extra corn into the pile. We're watching the weather forecast right now, at least here in the short term. Things are going to be warmer, wetter overall across the grain belt. So if we get some of these good rains that hit some key areas, that's going to get this crop off to a pretty good start. So it might make things a little bit difficult here in the short term. So if you move a few sales, get yourself to a comfortable level here, still have a pretty doggone good average, then go start looking at some of those calls out into the spring or even December just to keep some weather in front of you. But again, might be a window. How much do you want to spend on top of a 550 sale? Maybe you move out of the money and don't spend a lot. So therefore, if it doesn't work, you don't get yourself hung out on an expensive call, but at least have some insurance in case all of a sudden the weather does turn less friendly and this market decides to go back to those highs. When the USDA came out last week on that first projection for the new crop year, the 21-22 market year at 1.5 billion bushels, that was a little bit of heavy, compared to what the market was anticipating. So realistically, 1.5 is not 650 corn. It's probably $5, 550 corn, and we keep a little weather premium in just because of the conditions that are out there. So I'm a little cautious here. If the rains materialize, the planting pace is great. This market probably has a little bit more downside between now and June, so I'm watching for that a little bit here. But at the same time, we've had a pretty aggressive pullback that you can pick up some ownership kind of back at those highs, not put a lot of risk on the table, and open up any sales in here just in case this market decides to run back.
John, soybeans tried to rally on Thursday, just seemingly hang on to the momentum. You look at the soybean market, maybe it hasn't taken as big of a hit as the corn market, but do you feel we've leveled out in soybean prices, or do you feel like there's another break coming in the soybean market?
I still think we got a little room to fall here. Right now, we got a couple things kind of happening in the soybean market. The basis down at the Gulf are starting to soften up, and that's still going to be the big factor. That's not the case in the corn market, which keeps me friendly there. Just look at the weekly shipments. Corn was 2.3 million metric tons on the export report this morning. Beans around 350,000. So we're at that stage where the bean shipping program is really winding down. We're tight on supplies, but we're in that space where maybe those exporters aren't looking for beans as much, kind of put some pressure on the cash market. We've seen July contract really break back. We're, looking at a possible lower close again today. It does look like charts are pointing to a possible test of the $14.90, $15 level. We'll see what options expiration gives us tomorrow for the June options. So, there's a lot of little pieces in here. Now, longer term, still friendly this market. I'm actually going to probably look to get some opportunities to own these breaks here. Whether we use some call strategies for the summer months or get some ownership over new crop sales if we've missed some opportunities there. This market may be giving you an opportunity. Realistically, of the two markets, the tighter supply picture still in the soybean market. And obviously with the talk of more corn acres coming into play, that may not add those bean acres that this market does need in order to really get that carryout number maybe a little bit more comfortable. So that could be something to keep an eye on. And then obviously we still got to figure the weather. Right now it's a bit of a technical breakdown, and we're seeing prices, contracts move to the sidelines. Again, still think we got a little bit of room to fall here, but then it might turn into a pretty good opportunity to get some ownership over top of any sales that you want to get the top side open on.
John, on the wheat side of the picture, under pressure today, that Wheat Quality Council tour, yield potential well above normal. And then also looking at those rains in the northern plains, that may be having an effect on spring wheat, although some of those rain totals aren't as high as they were forecasted to be so far. But overall, looking at the wheat picture, why don't we start with that quality tour? What are some of the things that you're hearing and seeing out of that tour that's causing us to break in KC wheat here on Thursday?
Well, we saw that tour come in with their final numbers, estimating the crop around 365 million bushels. USDA is currently at 330. 5-year averages around that 330 window. So obviously coming in a little bit heavier than anticipated. So that's going to put some pressure on the market. Obviously, there's been some good rainfall through that region and some of those areas recently. That's really helped that crop out. Maybe the tour hit that crop at its highest potential, in this window because of that moisture. So we'll have to see how that plays out. Again, still a lot of things that could come into play there that could limit that crop if, the rainfall drops back, disease pressure, things along those lines. But again, it just kind of gives us a heavier supply picture than we really need, and that's going to weigh on that wheat market. Watching those northern rains, forecasted for more here over the weekend. Early hasn't been much, and they need a lot more, obviously, to get that drought, back under control. And even maybe the rainfall this weekend won't be enough in that regard. It's going to be pretty interesting to see how that shakes out. But, we're seeing a little more friendly weather in those two regions, and that's enough to keep some pressure on this wheat market. break into some lower lows here this recent window. The 675 on Chicago area is going to be pretty key. We need to kind of hold that, at least technically. You'll have to watch also, too, what happens in the corn market. Good strength today. If that starts pulling higher, it'll just pull wheat higher as well. Or like a case like yesterday, can also be the leader on the downside.
Talking strength, let's go to livestock and beef net sales on the weekly export sales report. Marketing year high, 56,900 metric tons. John, that's a huge number for this cattle market, but then we didn't really do anything on the future side today.
Yeah, here's market year high, nearly 60,000 tons plus 53,000 in shipments, which is just a massive number. Once it gets us, 30, 40 cents down. So it's disappointing again for, cattle producers. Not to chuckle, I'm more laughing at the craziness of how that market has behaved. Again, we're still dealing with a heavy supply picture of cattle, even though the demand is good. A lot of little pieces working right now in that market. Maybe the market's getting a little more aware, the news cycle is getting a little more aware of what's happening between the margins for the packers, what's getting back to the producer, what's getting pushed onto the consumer. We'll have to see if something comes together out of that meeting between the cattle groups this last couple of weeks here. At least, again, bring some cause to that, what's happening in that issue. Biggest thing I'm watching, though, cattle on feed report coming out tomorrow. That's probably some of the reason we're very muted in our reaction today. Obviously, cattle on feed numbers are going to be very distorted compared to last year as we're dealing with the COVID situation last year at this time. So I'm going back and looking at 2019. If cattle on feed placement or cattle on feed numbers come in at 1.3% of last year, 1.4% of last year, that's still going to keep us below the cattle numbers in 2019. So we are still seeing a tighter supply picture overall. But when you start looking at some of the variables that are out there, it makes it a little hard for prices to rally. So I think maybe we got to get through that. I'm still very, very cautious of another break lower in the cattle market just because of seasonal low. Get that kind of push in here after we get through kind of the May grilling demand window. So I'm just cautious right now on where the cattle market might be headed to. Obviously, feeders, kind of a tougher day today, maybe reaction to the corn going a little bit higher. But again, there too, it looks like we kind of maybe hit a little bit of a near-term top with a chance to turn the market lower. So moved a little defensive on the cattle market here this week. Still love the long-term picture, but I still think we got some work to shake out.
John, one of the interesting notes on cattle too in that weekly export sales report, the Netherlands took a bulk of that beef this week. That was a little surprising to me.
Yeah, that was a big number at 33,000 tons. Like I said, it was surprising that, I was very pleased to see China was the second largest buyer at 9,200 metric tons. We did get that news this week, too, that Argentina is going to be suspending beef exports for 30 days. That's a big factor in the cattle market. Again, didn't give us much of a reaction, but maybe this is a little bit of a precursor to that coming. Obviously, that may have been talk out in the marketplace before we found out about it through the news lines. And Argentina was looking to make sure they lock in supplies in case there was a movement. The Netherlands looking to lock in supplies in case there was some movement in price. And so we became the next available market to them. Argentina, in terms of numbers, they're number 5 exporter in the world. They were on a record pace so far here in the in the spring, late winter months. And typically about 7 to 8% of global supplies of exportable beef comes out of Argentina. So that's not a small amount that can go to the sidelines, and that should turn into some more export business for here in the United States. We got a lot of questions what's going on with Brazil and their cattle industry right now because of the feed costs and things of that nature. Maybe we'll start seeing that show up a little bit more in these export sales. So that's something I'm going to be watching over the next couple of weeks.
Hog market today was strong, opposite of cattle. Saw some good triple-digit strength in the hogs on the futures board. Pork net sales, 19,200 metric tons, up 29% for the previous week, but still down 1% from the prior 4-week average. But all in all, a better week on the export side for pork than it was last week. That's for sure, John.
Yeah, it was. And, that's, again, 2 different types of markets in terms of mentality right now as well. Here we got, I would classify okay numbers for pork, not exactly anything where we were the past few weeks, and the market rallies triple digits. Get strong numbers for cattle on the export side, and we can't even bust a positive day on the front end. Right now the hog market's had a bit of a correction. It's kind of stabilized itself a little bit. I love the close today. I think we could see some money flow coming back in. There's still some very good value out there on the global scale, and that's going to help push that hog market higher. One thing I'm watching right now, and it's a bit of a concern, Chinese hog prices on the Dalian exchange have dropped to basically the lowest point for the year, putting some pressure maybe on the hog market the last couple of weeks here. So a lot of questions where that Chinese hog herd is, what's going to happen with the longer term demand. That's maybe why we see the deferred contracts be a little more muted, because there's still a lot of question marks out there regarding what's going to be their demand side of the picture going forward. But at least here in the front end, the short term, it looks like those hogs are really ready to go back and challenge those contract highs.
John, any final thoughts you have for us here on this Thursday?
And, it's going to be an extremely volatile time frame. Even like today, 15-cent jump on the highs in corn today. Kind of got everybody scratching their head, but think about how much we lost. It's really a small portion. Watch the trends, where we at after weekly closes, things of that nature. That kind of gives you more of a direction, maybe than the day-to-day trade, because, again, money's going to flow very quickly in and out. Been very cautious what's going on in those outside markets. Stock market's going to put in probably another negative week, barring a big day tomorrow. That's on the mind of a lot of traders. We've seen to have a little bit of a sell and may go away mentality in even the commodity sector here these last week or so. So cautious, take advantage of opportunities. But again, still like where we could be in the longer term story here in the commodity space. But at least maybe in the short term might be a little bit more of a bit of a pause.
John, the producers want a little advice. They can reach out to you and the team there at Total Farm Marketing and get some of that advice, give you a phone call, or check out your website. There's a lot of different ways to reach you, isn't there?
Yeah, I love chatting with them anytime. Feel free to give me a call at the office, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget that website, totalfarmmarketing.com. We got a lot of great information on there. We'll have another webinar series after the next USDA reports here coming up in June, as well as market quotes, weather news information. Plus, you can see my bio and reach out to me through that as well.
John, appreciate the time as always. Have a great weekend. We'll talk to you next week.
Sounds great, Jesse. Have a great week, and I appreciate everybody's time.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk, brought to you by Growmark FS. That's going to do it for our show on this Thursday. I'm your host, Jesse Allen, wishing you a great rest